Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, what do we got going on in the markets today? It's a little bit of a down day. Dow's down about 250. The Nasdaq's down about 100. Now, we had that head fake on the S&P where we went up to 4,200, but we come right back down to 4,100. Now, nothing goes straight down. I do think we're going to go a lot lower from here. I think we're going to drop down to the 3,400 level, but nothing goes straight down. We've gapped down today. Now we may come back up to 4,150, fill that gap, and then head lower. It just depends. Sometimes you keep going, but sometimes you come back and fill the gap. So just be aware that we might not go straight down, but we're at 4,100 again. We're down below the 20-day moving average. Now the VIX, it kind of, it's kind of rallied back up. It was, sitting at 16, which is really low for the VIX. Now we're at 20. So we rallied from 16 to 20, but the VIX is above the 50-day moving average. Now, when the VIX gets above the 50-day moving average, bad things tend to happen in the stock market. The stock market tends to come down. Now, the VIX is a volatility index. When there's volatility, the markets tend to come down. So I'm expecting a pullback down to the 3,400 level. Just my take. Yours may be completely different. Now, speaking of completely different, a lot of people have completely different take on the real estate market than I do. Okay, so now Redfin, they came out and we say that, prices across the nation are down 4% year over year. Year over year, we're down 4%. Now, new homes, it's down about 8% year over year. So new homes are doing a little bit worse. And, the National Association of Realtors, they even came out and said we're down year over year. So my point is we are coming down. And in the last 9 months, on new homes, new home prices came down 15% just in the last 9 months. And they've done this that's the quickest drop we've ever seen, 15% in 9 months, quickest drop on record. So this bubble has started to pop. Now people go, but Mike, inventory's low. It's not possible to have a crash. Now here's the thing. Okay, the reason we're going to have a crash is because inventory's low. Okay, think about this. Right now we are falling at the fastest rate in history, right? Fastest rate in recorded history. New home sales down 15% in the last 9 months. Okay, that's incredibly fast, right? All right. Well, there's no inventory out there, right? Zero inventory. Nobody's buying existing homes. They're only buying new homes because that's the only inventory. But yet, prices are still coming down at the fastest rate in recorded history. Now, think about what is actually going to happen when inventory comes onto the marketplace. And I promise you it's going to come onto the marketplace. When you get a recession, when you get the number of job losses we're having right now, the inventory is going to be coming on in a way of forced selling. So inventory is going to be coming onto the marketplace. And I know what you're saying. I hear it. I can hear it already. But Mike, I live in an area where a house comes on the market. There's 30 or 40 offers the first day it comes on the market. Prices cannot go down. Right. No inventory, 30 offers, but yet the prices are dropping at the fastest pace in recorded history. So there is going to become inventory onto the market. There's being a lot of new builds. A lot of vacant homes are going to be coming onto the market. They're setting the vacant homes aside, waiting for the prices to rebound to where Billy Bob got. Now, look at Billy Bob got out up here. And right now, my job as a real estate broker, went on 3 appointments, and I'm telling these people, look, you're not going to get what Billy Bob got in these particular areas. One was in Mountain View, one was in Santa Clara, one was in San Jose. And all of these areas are already down 20% below the recent comps in the area. And it's really hard to explain to the people. Yes, I know your neighbor sold for 1.2 million, but your house now is only $1 million. If you sold a year ago, you could have got the 1.2, but right now I can't make that miracle happen for you. And you see the these tears starting to come out of their eyes. It's kind of sad, but it's just the reality of the area I live in. I live in Silicon Valley, right? A lot of tech jobs have already gone away. Now, I know it's not going to happen in your area because real estate is very localized. It's very regional. But once it becomes a systemic crash, all areas will be coming down, and we will get to that point. We're early in the game. We're only in the first 9 months. This takes 3-4 years to play out. I expect it to be picking up steam by the end of this year. I expect prices to really be starting to come down a lot quicker, and that's just my take. Of course, I know your area is rock solid. Now think about this. This is just common sense to me, right? Common sense. Right now, the affordability factor on homes. The affordability factor means that right now 20% of people, only 20%, can buy the average price home. Now, a lot of you think homes are going to double from here. They're going to double. If they go up another 5%, 20% number is going to go down to only 10% of people can buy the average price home. I really want to know who you think you're going to be selling to if prices were to go higher. Now, a lot of people say, but Mike, wages are going to go way up. Well, maybe they will. That AI thing's coming out. I don't think that's going to make wages go up, right? Artificial intelligence, I'll probably make them come down. Going to wipe out a lot of jobs. Going to be a lot of unemployment. Right now, we're close to full employment, right? We're at 3% unemployment. Now, I think that rate's going to double. I think it's going to get to 6%. And then it could double again. That'd be really scary because it'd be above 10%. But Mike, that could never happen. This is the United States. And I get that. We're a strong country typically, but we've done a lot of dumb things. You see, we tried to print our way to prosperity, and that's what's caused this bubble in the real estate market, in the stock market. No country can print their way to prosperity. What happens usually is hyperinflation. But Mike, we got the reserve currency. A reserve currency has never hyperinflated. And that's true. It's never hyperinflated yet. This time may be different. This time may be the time where a reserve currency actually goes to hyperinflation. It's a possibility. It's not out of the question. If we continue to print money at the pace that we're printing, it's not going to end well. Look at real estate bubbles. They're very rare, very rare. It's very rare to have a real estate bubble, and we've had 2 of them just in the last 20 years. Now, stock bubbles, those happen all the time. Bitcoin bubbles, those happen all the time. What is that new one? Pepe coin? I don't even know what that is, but I think it's in a bubble already, right? I mean, bubbles happen all the time, okay? But in the real estate market historically goes up 1% a year, maybe 2 on the outside. So 1 or 2% a year. It's very rare that it goes into a bubble. The reason it goes into a bubble is bad policies by the government. Now, the government, when they did, was they kept interest rates at 0%. You keep interest rates at 0% in the subprime. The subprime crisis, we were giving loans to anybody. You get a loan, you get a loan, you get a loan. I thought I was on an Oprah show. It was amazing to me who were getting these loans. I gave one to this 30-year loan to this 85-year-old man. That one never got paid off. He passed away and the bank got mad at me for giving an 85-year-old man a 30-year loan. I said, I didn't give him the loan. You guys gave him the loan. Well, that's true, but they didn't like me bringing him in because he died. It happens, Okay, so but it's government policies that create these bubbles. Look, we've kept interest rates at 0% for over 12 years, right? Okay, we printed money, trillions and trillions of dollars, like $10 trillion just in 2 years. 10 trillion in 2 years. And then on top of that, we went out, we had the Federal Reserve start buying up mortgage-backed securities so that there's more money for the housing market. They bought 3 trillion of these. Do you think these are good policies? Do you think this is going to end well? No, this is going to end in catastrophe. A lot of people don't get that. Look, I know. My job is, I'm supposed to be the real estate broker. It's a great time to buy. Get out there, jump in. The water's warm. Dave Ramsey will tell you that. Barbara Cochran will tell you that. I got to be a little more honest. It's not a good time to buy. Look at rates have doubled 3% to 7%, but prices haven't come down yet. Oh, mark my words, they will come down. There'll be a lot of bag holders. And yeah, I get it. There's 30 offers on each home in your area that comes on the market. And those people are going to have some serious regrets. You see, what happens in the real estate market is people buy at the same time. It's herd mentality. Everybody's buying. You know what else they do? When everybody sells, they all sell at the same time. You see, as prices are going up, inventory's going down. But here's what the other thing. When prices start to go down, inventory starts to spike up. It's almost counterintuitive, right? But that's how it works because everybody jumps on the bandwagon. Right now, we got a few tricklers, they're still trying to buy the properties, trying to hit the all-time high. Well, Billy Bob sold his to Ray Ray. Ray Ray hit that all-time high. You're not going to buy at the all-time high because we're not going to get back up to those numbers. You don't want to be Ray Ray. You want to be Billy Bob. And even if you can't be Billy Bob right now, you can be within 10% of what Billy Bob got out at. It's still an opportunity for you. Now, you got to do what make your own decisions. I'm not here to make the decision for you. If you want to buy a house, I'll sell you one. You want to sell your house, I'll list it for you. That's my job. That's my job, right? But this is my opinion. My opinion, we're going to come down 40% from here. Already down about 10%, and we got another 40% to go down, and then we'll be back at the mean, right? But people move in herds. They move in herds. They all buy at the same time. I mean, you can go to the open houses. And now this is a time when I got greedy. I was a naive young man at the time. I owned 3 properties. I thought I was king of the world, right? I had 3 properties. My friends couldn't get into houses. I had 3 houses. Now, I had them all rented out, and I was just renting a room in the house because I didn't really have money. But what I had is a lot of leverage, and I thought I was doing great because I could sit there and I was a real estate broker way back then. I knew what prices were. Now you can just click a button and go on Zillow. But back then you had to go to the MLS books to find out what things were selling for. The public didn't have the information that they have now. Now you just click a button, you're on Redfin, you can tell what your house is worth. Okay, we didn't have that, but I had the MLS book so I could see that the prices were going up, and I had 3 of them. But the problem was I was levered, but that's all right. I had all this equity in them. I was making money hand over fist. I was the happiest little 20-year-old man you ever seen. I was in my 20s, and I could sit there and I go, I better get out of one, So I put the first one on the market, and oh man, the open houses were packed. The herd came. People wanted to see what was for sale, and I had offers. Now that particular house, I remembered I bought it for $160,000, and I had offers at $280, $290. I even had $300, but 160 times 2 is $320. I wanted to get $320. I wanted to get that top number. I wanted to tell everybody that I doubled my money. I doubled it. I doubled the value of the house. And the house doubled in about 18 months, a little over a year, right? Went from 160 up to 300. And I had an offer for 300, and that was stupid. I turned that down. I turned it down. I said, no. You know what happened the next weekend? No one came to the open house. Oh, no. No one came the weekend after. Oh, that's bad. That's real bad. Oh, you know what? I ended up selling that house. I got out of it. I think around 240, but I had 300,000 in my pocket, and I turned it down. But I made some money on that one, right? Well, you know what that money was doing, because the houses were starting to go like this. This was back in 1986, 87. I know, Mike. Mike, you're an old guy. Nobody wants to hear your stories. Maybe you do, maybe you don't. But what happened? The market kept dropping. I got underwater on the other ones. I spent that 40 grand trying to keep them afloat. I couldn't sell them to anyone. There were no buyers. You couldn't sell. No matter what the price was, the market locked up. It was frozen. I couldn't get out. I was panicking. I was this close to declaring a bankruptcy. I had to borrow money from my sister just to keep my head above the water. And then finally I got lucky and I sold one. Oh, a little breathing room. But that last one, that was hard to get rid of, man. I got back to zero. I lost everything. Okay, but I was rich. I was very wealthy in my 20s. So it was a good time. But I lost it all, right? Because I got greedy, because the market came crashing down on me. It's going to happen again. Right now you're riding high. You're going on Zillow. You're looking at the equity. You're hitting Redfin. Redfin says I got more equity. Oh, man, you're making money. You're rich. It can turn in a heartbeat, one weekend to the next. The herd goes away. The herd goes from all buyers to all sellers. And when they go to all sellers, guess what? There's no one left to buy. The buyers are gone. It happens that quick. It can happen that quick again. Now, I think by the end of the year, we're going to see this acceleration start to pick up steam. That's just my take. If you like this stuff, give me the thumbs up. Get out there, everybody. Enjoy the day. I'm Tall Mike. Thanks again. Bye-bye now.